sponge system.
Let's start with that. You come from a research economics background.
Yes.
We are at Viva Tech Paris. You want to introduce Briter Bridges?
Yes. Sorry, Adam. Thanks so much for connecting with us.
And first of all, why are you not the PitchBook of Africa? Because that's how I've summarized you, and then you said, no, that's not quite right.
Well, so I think maybe the difference between us and PitchBook is that I think in the markets where PitchBook primarily operates, there's a lot more capital that is going into investing in startups there, and that means that they can have that PitchBook or that database or subscription as the primary product that they offer. For us, as I think people are aware, only about 1% of the total share of venture capital funding goes to Africa, which means there's a much smaller market for us to basically sell our platform to. So rather, our platform is more of an entry point that we use to generate leads with investors, with DFIs, with governments, etc., corporates that we can then do deeper research on to help them scope their investment strategies, help map different startups, and similar type of research or advisory type of work. And I think that's the big difference between us and PitchBook.
If you can't make your money from subscription to a database service like PitchBook, most of your revenue therefore comes from where? How are you able to be sustainable financially?
It's interesting. I think there's two things, and I actually think what's funny is we're a startup in Africa, working on startups in Africa, and so what you often see a lot with startups in Africa is B2C is a very hard model. So individual customer sales is really challenging. So you have a lot of B2B strategies. So we actually work a lot with businesses and other corporates as well to white label our data for them. So let's say, for example, there is a company that's focusing in health. And they want information on just health startups that they can track and monitor as part of their portfolio management. Well, we can white label our data for them. So I think the challenge that we have of primarily wanting to work in Africa is similar to a lot of other startups, is you need to bundle your services in order to create a viable model. So we have the white labeling, we have the subscriptions, and we have the research and advice. And I would say the other thing that probably differentiates us, and there's no I don't want to criticize PitchBook at all. I don't really know them very well. We're incredibly mission and impact driven. So I think one of the challenges that we often struggle with is that when we do research, when we do advice, we really want to ensure that we're aligning the potential transformation or contribution that can have towards the African economy through startups and through innovation, which means we end up going down rabbit holes, spend a lot more time with research, we spend a lot more time kind of connecting different types of stakeholders together. So I think there's an element of change of what we do that also is where our research and advice fits in.
And you mentioned some trends, and people probably know this if they've dug around, that valuations peaked in 2021. It was all about fintech and consumer
what was really, really interesting was when you look at the data from 2021 and 2022, all of the companies that track investments in Africa said 2021 and 2022 were huge years, and 2022 was an even bigger year than 2021. But I think actually what we all were seeing was time lag in data, and the fact that investors operate in a financial year. So really there was one year that was a bubble, the second half of 2021 and the first half of 2022, which would fall in the financial year for an investor, and this is where you see valuations peak over that time. And you can literally see a line graph go like this around that period as you see deal flow happening, and you see once the drop-off comes, a lot of it being in later stage companies, fintechs and markets that raised at big valuations in 2021. And it's not that I criticize anything for that. I think when you have the opportunity to go to the market to raise and you can invest that money well, it's really, really important. And I suspect a lot of those companies still have good runway that will help them to get through this more challenging time. But what we're really excited for is we're also seeing in the data more deal flow into sectors that weren't as traded over the last few years. So the example I was telling to Andrew previously was in the ocean economy, as well as in ag tech and climate tech.
And so ocean economy startups?
Two of the big startups that have raised over the last 3 or 4 months have actually been in the digitalization of fishing value chains. So Abelobi in South Africa and Victory Farms in Kenya. And they're really kind of driving the use of technology and digital tools to enhance the productivity of fishermen and increase their access to markets. The other place where I think we started to see last year and we're seeing is climate tech. Now, I think there's maybe going to be some more questions that emerge around climate tech. There's been a lot of money that's flown into it, a lot of subsidies, so we'll have to keep an eye on capital efficiency. but it has been really encouraging to see, this, I wouldn't say cycling out of fintech and e-commerce, there's still a lot of activity, but this kind of looking beyond it to some new, really interesting sectors and products.
Okay, there you go. And the other tidbit that I remember I think it was you mentioning, is that pay-as-you-go solar did not do well.
So the one thing with pay-as-you-go solar, and I think I'm not the only person that can quote this, I think there's been a lot of research on this, is that it's been a very hard model, very hard to build a viable model for it in rural communities. And so a lot of the support to that area has been through indirect subsidies, often through the funding that has gone to these startups that can offer lower prices.
Right.
Well, when that funding is being pulled out, you can start to see that perhaps those aren't as viable, and that in some cases some of those communities might prefer alternative access to other types of energy. But because they've been kind of really driven to use these types of products, that's trickier and more challenging.
Got it. Thank you so much, David. David Saunders.
Thanks.
Goodbye from Viva Tech. Au revoir.